Dum 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 dum. Good morning, good morning, good morning. It's Tuesday, the 17th of September. It's me, Ryan. We're waiting for Mr. Brown Shoes. There he is. Bright as a button. Oh, out, one sec. Invite co-host, invite co-host. Alright, try that. Oh, I slept like a complete twat last night. I am knackered.
Good
Morning.
morning, Ryan. Good morning, everybody. Happy Fed Day Eve.
Well, yeah, the purists could say Happy Fed Day because technically it does kick off, or Happy FOMC Day, I suppose. So it does
Indeed, it
kick
does
off
kick off
today.
today. That
One
is
second, let me
true.
just do the legals. Nothing discussed on this basis session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, traders PIQ or PIQ Suite, or its affiliates, including hosts, which is obviously, as usual, Mr. Michael Brown and myself, Mr. Ryan Paisley. How are you?
I'm very well, thank you, mate. Very well. Very much a sort of calm before the storm vibe to yesterday and also to this morning, actually, it feels.
We've actually had already this morning some quite civilized discussions on X, which is kind of baffling.
We have. It's very
And we
almost
agree, which is even
unbecoming of
more.
us, isn't it?
It's
I know.
it's the
Very.
yeah. Well, look, to be honest, for me, it's a novelty, but for you, it must be quite scary.
Well, it is. I mean, you're actually acting like a sort of normal human being this morning, which
Well,
is
let's not get
quite
carried
rare.
away. The show's only been going for a minute. You
Oh
wanker.
dear. Shall we
Oh
crack on?
dear. Yeah, go on. What happened yesterday?
Indeed, what did happen yesterday? Well, as I said, it was very much the calm before the storm, and that storm is, of course, the FOMC decision, which we will get tomorrow evening London time. But as Ryan alluded to, the FOMC meeting itself that will begin today at 3:30 p.m. London time. In terms of how the market is currently viewing pricing for that meeting, we have seen a continued dovish drift when you look at the OIS curve. The market, as of about an hour ago, implying a 42.6% chance of a 25 basis point cut and around a 57% chance that the Fed deliver a larger 50 basis point cut tomorrow. In terms of some of the other market moves that we saw yesterday, equity.
Sorry,
Oh,
should
go
we
on.
just, whilst we're talking about that pricing, should we just reiterate what we were saying on Twitter, just for those that haven't
Yes, but can I say one
listened?
thing first?
You can.
Which is that, and I ran the numbers on this yesterday, which
Oh,
took
he's ran the
far
numbers. He's ran the numbers.
far too bloody long to do this in an Excel spreadsheet, but it was a quiet day. Only once since 2009 has the Fed deviated significantly from what the curve was discounting on the Monday before a Fed decision on the Wednesday. And that was on the 3rd of March 2020, which was obviously when they delivered that emergency 50 basis point cut right at the start of the pandemic. So essentially, pretty much every scheduled meeting since the start of 2009, the Fed have done what the curve was pricing on the Monday of the FOMC decision.
Yeah, that's fair. Although I would say this is slightly abnormal. I think we've had some moves that kind of maybe are a bit perplexing. I know BOE, well, funny enough, Andrew Hart's put it in his note this morning, mentioning that this is the most uncertain FOMC on record due to the pricing, although I'm not really too sure I get why. I don't really understand where they're coming from with their pricing, because all they're doing is
Well,
pricing
it
the
only goes back to 2015, which
yeah, and
is
also
not.
they're only doing the probability of a full 25 cut, and they're saying the most it's been is 49, which I fail to believe that's possible. But okay, anyway, so just for those that weren't paying attention or weren't listening or weren't reading, sorry, what me and Michael were saying earlier this morning, as we've said a few times in probably the last 3 or 4 morning blasts, is that we'd be increasingly shocked if there wasn't some kind of Fed whisper, or some sources comments coming out to kind of give the market a little bit of a steer ahead of the actual release, because the way things are set up at the moment, pretty much whatever the release is will have some massive volatility, and Powell et al.
Yeah.
Will fucking hate that. They really do not like to spook in the market. They make a point of not spooking the market. They actually are vocal about not spooking the market, so they will absolutely do everything in their power not to spook the market. Obviously, we're playing the drinking game today, where if I say spook, you have to drink. So
Yeah, I mean, I was going to say, I said this yesterday, I'll say it again. This is almost the nightmare
Oh yeah,
scenario for the
very much so.
FOMC, for markets to be on this much of a knife edge 36 hours or whatever it is before we actually get the announcement itself.
Yeah, no, absolutely. And yeah, you were saying that you would expect a whisper before 10:30 Eastern time when today, which is obviously when the FOMC meeting kicks off. Personally, because this is kind of I feel this is very much a outlier event, an edge case scenario, as my developers would say when I'm trying to moan about something that's not quite
God.
working and it's only not working for me. Because of the edge case scenario, I believe, well, my money would be on, if I was a gambling man, them getting their heads together when they meet up
If
today, if it, getting their heads together today, deciding what the whisper is going to be or the source's comment it's going to be, and then release it. So I'm not looking for a release or a whisper or a source's comment before 10:30 a.m. It'd be nice if we'd got one, but it's not like that's the red line in the sand for me. I would go as far as saying as long as we get one before tomorrow morning US time, I think that's better than it all happening at once when the figure is released. But again, I think it's going to be very, very live regardless. And obviously, when we say live, for those not aware, that just means anything could fucking happen.
Indeed, yes, and we'll see what happens because sadly neither Ryan nor I have an inside track on the
Mate,
FOMC.
I've barely got an inside
So
track of my own
yeah,
life.
well, I didn't want to go there, but yes, you're right. So yeah, I think you're absolutely right. We are going to remain very alert for potential rumours and sources around the Fed as the day progresses. In terms of just a very brief look back at yesterday, it was a relatively light day in terms of catalysts. Equities did rally the S&P up by about 0.2%, although there was some notable softness coming through in the tech sector. The Nasdaq was down by about 0.5%. Apple slumped yesterday. There were some reports that demand for the iPhone 16, which is of course identical to the iPhone 15 and the 14 and the
Different
13,
colours, mate. Different
is
colours. What are you talking
substantially
about? Different fucking
is
colours.
substantially softer than have been expected. So that's pressuring Apple, and we also saw some weakness coming through in some of the AI names as well. The dollar traded broadly softer on the day. Not particularly surprising, given that we saw treasuries down 3 to 5 basis points across the curve, depending on where you look. Dollar yen, initially, the yen was the biggest beneficiary of the dollar weakness, trading south of 140 for the first time since the middle of last year. But we paired most of that move as the day progressed, and we are pretty much trading close to the highs this morning. In the end, it was the higher beta G10s that were the eventual winners, with the pound, the Aussie, and the Kiwi all trading around 0.6% firmer on the day. Elsewhere, gold notched a third straight record high, trading around about 0.1% firmer, and WTI crude settling north of $70 a barrel for the first time since the 3rd of September. In terms of other catalysts, as I said, they were relatively light. Something that did grab quite a few headlines is the Fed's reverse repo facility. Usage of that fell below 240 billion for the first time since
Where's my
2021.
market
It
collapse?
does
Where's my
seem
market collapse? I was promised by the
well.
talking heads that when this happened and when this all dropped off a cliff, I was promised market meltdowns.
Maybe that will happen tomorrow. Who
Oh,
knows?
oof, oof.
But obviously, the Fed's continuing quantitative tightening. They tapered that from 60 to 25 billion in May or June. I can't remember at this point. It's likely that QT will wrap up before the tail end of the year. It's tough to justify 75, 100, 125 basis points of cuts while continuing to run down your balance sheet. We also had some news out of Amazon yesterday. They have told all their staff that from next year they have to return to the office 5 days a week, which is a brilliant announcement. I think all companies should
I
follow that.
I did think
Of
this would be
course,
coming out. I did
how
think you would. If I could bet, if there was a betting market on what comes up in conversation, Amazon employees being forced back to work is definitely something I thought you would say.
Well, I'm just annoyed that our mutual friends Tom and or George aren't on the call to listen to
Actually,
that. It must be said though that Amazon are now setting themselves up for a fight with the UK government. Jonathan Reynolds, the business secretary, and Angela Rayner, who
ugh,
is a bit of a hanger-on,
ugh.
they are reaffirming that Labour want to give everyone in the UK the legal right to work from home because they think it will boost
Well,
productivity. Not going to go down that rabbit
just
hole
can I just
because
quickly
we
say
would
though, I
literally
think
be here all
someone did
day.
a very, I know we love a rant about this, but someone did produce a stat I saw on Twitter, which was like the out of um the current cabinet, the total years spent in like a proper job was for the whole cabinet was like less than 10 years.
Oh my
It's
god.
like, so we're basically being run by people that have never had a job. Also, something that was released yesterday, and this one, okay, I apologise for going on a bit of a rant here, but the price of alcohol is quite important to me, so I'm going to say it. Someone posted a picture of the price list in the Strangers Bar yesterday, which is the bar inside the House of Commons. Um, all I can say is,
It's all
mate,
subsidised, isn't it?
I'm paying over a tenner for a bottle of beer at the Stafford. They're getting a bottle of champagne for £16. I'm I'm outraged.
I mean, I do agree with you, although I must hasten to add that I don't, as much as nice as it is, I don't think the Stafford is an entirely representative example of London beer pricing. But yes,
Outraged.
it is
Outraged.
ridiculous that they have that.
Anyway,
Anyway,
moving
just
on.
to go back to yesterday very briefly. We did hear from a couple of ECB speakers once more, Chief Economist Lane, Vice President de Guindos, both waffling about how they don't have a predetermined path for rates. I mean, at this point, if anyone doesn't know that, if you've been on Mars for the last few weeks. And one bit of economic data yesterday was the Empire Manufacturing Index out of the New York Fed. That index rising to 11.5 from a prior negative 4.7 in September, above the top of the forecast range, and also the highest level since April of 2022. So perhaps dispelling a little bit of the doom and gloom that has surrounded the manufacturing sector of late.
Awesome. Is that you done at the moment?
I
Okay,
am, yes,
perfect.
I'm
Okay,
done.
so a couple of quick headlines from our friend Andrew Hart. Firstly, funny enough, talking about rates, BlackRock said the Fed very unlikely will unlikely not cut rates as deeply as market expectations are pricing in. They're going for a 25 cut. China tensions, United States and Japan are
Who was that?
BlackRock.
Sorry. Oh,
Cool.
cool.
The United States and Japan are close to a deal to curb tech exports to China's chip industry, despite alarm in Tokyo about Beijing's threat to retaliate against Japanese companies. Obviously, this is an ongoing saga. Just moving away from there, a couple of geopolitical headlines from our friends at News Squawk. We got Secretary of State Blinken is traveling to Egypt today for a US-Egypt strategic dialogue. Something of note yesterday I read about Egypt is that Saudis are pumping in it's like $5 billion or $50 billion or something like that, or some huge number. You know,
I mean, there's quite a
I
spread
think
there,
it
mate.
well, five feels a bit low. I think it was 50. Well, regardless, the Saudis are starting to the PIF, which is the Saudi Investment Fund, as sovereign investment fund. They are sticking a load of money into Egypt, so wouldn't be surprised if the US are getting a bit nervy about that and want to go, "Hi guys, we're still here." Also in
Mhm.
Iran, the nuclear chief said his discussions with the IAEA Director General, I'm always very proud of myself when I say that, were good and marked a step forward, while he added that Iran's relations with the agency remains stable and will not be undermined by psychological pressure. Side note, I do remember seeing Iran make a statement yesterday saying they will never give up their ambitions for missile technology. Nice positive dialogue there. North Korea's foreign minister traveled to Russia. We've had two Chinese Coast Guard ships arrive in Russia's port Vladivostok for joint drills. Look at me naming names like that. And just quickly a scan over the Reuters headlines that we've had over the last, say, 12 hours or so. Ones that are standing out are obviously completely unrelated, but von der Leyen is set to name her new European Commission today. We obviously had Breton got basically binned off yesterday due to a little rift between him and von der Leyen. So it'd be interesting to see what that is. And completely unrelated, the global index for free and fair elections suffers the biggest decline on record in 2023. Yeah, I'm not casting aspersions or saying that the EU is non democratic, but there you go. It's just the way the headlines have landed on my desk this morning. Honest. We've had Germany pledges additional 100 million euros in winter aid to Ukraine. The reason I'm bringing this up is because these numbers that we're seeing thrown around, are definitely getting smaller. And it's no coincidence that they're getting smaller from the countries that are getting increasing amounts of domestic economic strife. So obviously it's a lot harder to sell to your voters that you're throwing away, or not necessarily throwing, that's the wrong language, sorry, but you're giving away money when you don't have it to spend on your own citizens. So this could be a theme that we keep seeing increase as the months move on. We've also had overnight the US approves military sale, the possible military sale to Taiwan for spare parts for armed forces stuff. I'm really technical on this stuff. For about $228
Jesus.
million. Again, anything like this always rattles China, so one to watch there. Finally, obviously, we've had oil gains recently on the back of the storm that shut in some production of both oil and nat gas in the Gulf of Mexico. One thing that's likely to have capped the gains is the lower than expected demand growth in China, which obviously is the world's largest crude importer. One thing to note is obviously it's one of these, in my opinion, one of these things that when the bid disappears and you've got selling pressure that's just constantly kind of leaning on it, we normally fall off quite heavily. So it's one to watch. A little side stat is that China's oil refinery output fell for a fifth month in August amid declining fuel demand and weak exports. That was from data on Saturday. And I just saw this morning from Giovanni, UBS's oil guy, that two Sinochem oil refineries declared bankrupt as margins plunged. That news is on Bloomberg this morning. So things are not looking great for anyone trying to push a China recovery, increasing oil demand narrative. And that's all I've got.
Cool. Thank you,
Thank
mate.
you.
Right. In terms of today, then, there's quite a few bits and bobs to get through on the economic calendar. And of course, markets also looking forward to the Fed meeting tomorrow, which is going to be announced at 7 o'clock tomorrow evening, London time, in case you weren't already aware. In terms of things to watch today, then, at 10 o'clock this morning, we get the latest ZEW
Ooh,
surveys out of
my
Germany.
favourite figure.
The expectations.
Well,
Well, exactly.
bar
The
Tokyo CPI, my favourite figure.
Yes. The expectations metric, that's expected at 17 in September, down for a prior 19.2. That would be the third straight decline in the figure and also the lowest level since January. Moving into the afternoon session, we kick things off at 1:30 with the latest CPI figures out of Canada. Inflation expected to fall to 2.1 for a prior 2.5% in August. The market pricing the October Bank of Canada meeting as pretty much 50-50. We've got 37 basis
Oh,
points
great.
worth of cuts priced for that meeting, and we've got 74 basis points in the curve by year end. Of course, this data needs to be viewed in the context of weekend remarks from BOC Governor Macklem touting the possibility of larger rate cuts as they move closer to the inflation target. For those who aren't aware, the BOC's inflation target is 2% plus or minus 1%. So this print would pretty much be bang in the middle of that inflation band. And if we were to get a number slightly cooler than expected, then perhaps you see the market go sort of all in on the idea of a 50 basis point BOC cut at the next meeting. We also at 1:30 have the latest retail sales numbers due from the United States. Headline sales, they're expected to have fallen by 0.2% on a monthly basis in August. The control group metric, that's the basket of goods that feeds into the GDP release, that is expected to rise by 0.3% on the month, which would be unchanged from the pace seen in July. I wouldn't usually say that retail sales are a key driver of Fed
Bet you're
policy,
gonna.
but given the, well, I am, because given the knife edge way in which markets are currently positioned for the September FOMC, which is, of course, tomorrow. If we were to get a big deviation from that consensus, particularly to the downside, if we were to get a big miss, then you'd expect the market to kind of go all in on the idea of a 50 basis point move, depending, of course, on whether or not we get any of these sources or stories. A couple of other things to watch throughout the afternoon. At 2:15, we get the latest industrial production figures from the States. Production is set to have risen by 0.2% in August compared to the 0.6% decline that we saw in July. And at 6, we get some supply from the United States, 13 billion of 20-year bonds being
Peanuts.
auctioned off. Indeed, it is peanuts. Although the 20-year segment is a bit of an unloved part of the curve, despite my lookalike having introduced it.
No, no, I'll
Yes,
give you a
we
clue.
will
That's
see
not
how that
Brad
is
Pitt.
received. No, it's sadly not Brad Pitt. That's it.
Okay, sorry. Okay, cool. Well, okay, yeah, fine, brilliant. Listeners, thank you for listening as always. Again,
You
keep
know.
an eye out for some whispers from the Fed. I'm sure we'll get some. I'll be shocked if we don't, because that, as Michael has mentioned earlier on and on Twitter, that if we don't get any whispers that it's going to direct them to 25, it makes 50 more likely, kind of technically. So that'd be an interesting one to watch. Obviously, if you are trading today, keep it tight, and we will see you all tomorrow. Thank you, mate.
Nice
See
one.
you.
Thanks,
Bye.
guys.